In our view, the demand outlook for Indian renewable energy sector, especially the wind and the solar segment, is positive, also supported by strong policy focus and more importantly, an improved tariff competitiveness for both wind and solar energy. As you see, the competitively bid wind and solar energy tariffs in last 2 calendar year have remained below 3 rupees a unit, which is quite cost competitive for the state-owned distribution utilities, which are the ultimate off-takers. In terms of the project awards, almost 27 gigawatt of capacity has been tendered out in last 18 months, and this in turn gives quite reasonably healthy capacity addition outlook in the near to medium term. In our view, about 10 to 12 gigawatt of annual capacity addition is expected, both in the wind and the solar sector in the near to medium term. Nonetheless, there are execution headwinds, and that's due to a mix of factors. The payment delays from some of the counterparties in states like Andhra Pradesh, Telangana, and Tamil Nadu continue to remain quite significant, and that's a matter of concern for the entire renewable energy sector per se. And within that, there are IPPs which are single location, single asset based IPPs, either belonging to the relatively weaker of promoter groups. Such projects, they remain vulnerable from the credit perspective. We have also seen execution delays for certain projects in some states, both in the wind and the solar space, due to delays in either land acquisition or delays in getting the transmission connectivity approvals. Along with these factors, we have also seen significant tightness in the financing environment in the last 8 to 10 month period. There has been increase in the interest rate environment as well. So as a result, timely achieving the financing closure for certain projects could be a challenge in the near term in our view. In terms of PPA tariff renegotiation risk, our view is that the PPAs are the legal and assigned contractual documents, and they must be adhered to. They cannot be renegotiated unilaterally unless they are under mutual consent. Recently, there has been a move of LC requirement by MOP, which has been notified and being implemented. That is something which is certainly positive for the sector as a whole, although it is yet to be implemented by the DISCOMs in majority of the states for the renewable energy sector IPPs. Having said that, what is required and in a sustained manner in the long run is sustained cash flow improvement for the ultimate counterparties, which are state-owned distribution utilities. And for that, the three things are critically important. A, how is the tariff adequacy for the distribution utilities? B, whether the subsidy support comes in a timely manner, whether it is adequate for the utilities. And C, how focused and how proactively the utilities are able to curtail their operating inefficiencies in line with the the regulated targets. So that is something which is required, which will help these utilities to improve their financial position more in a sustained manner, and that is something which is required for the sector as a whole. Thank you.